Imagine two people. One earns $70,000 a year. The other earns $7 billion. At tax season, the first writes a check to the government. The second borrows money. Legally. No offshore crime ring, no briefcase of cash, no secret vault in the Cayman Islands. Just accountants, contracts, and a tax code thousands of pages long. Here's the paradox. How can someone gain billions and pay less tax than a school teacher? And the bigger question, is this a bug in the system or the system working exactly as designed? Every April, millions of workers trade time for money. Income comes in, taxes
A pleasure
go
to
out.
finally meet.
Simple.
I believe this will be very
But
profitable for
America's
us both.
tax system
I agree.
wasn't
Here's to a
originally
successful
built
partnership.
this way. In 1913, when the federal income tax began, it targeted the ultra-wealthy. Rates were low for most Americans. The rich carried the burden. Fast forward a century. Today, the top 1% own more wealth than the entire middle class combined. Yet year after year, headlines reveal billionaires paying shockingly low federal income taxes. Some years, zero. How? Because the ultra-wealthy don't live on income. They live on assets. And that difference changes everything. Think of it this way. You survive on salary. They survive on ownership. And the tax code treats those two worlds very differently. Let's break the illusion. When you earn a paycheck, it's taxable income. The IRS sees it immediately. But when a billionaire's company stock rises by $5 billion, that's not income. That's an unrealized gain. On paper, they're richer. In cash, nothing changed. And in the eyes of the tax code, no sale means no tax. It's like owning a house that doubles in value. You feel wealthier, but until you sell it, you owe nothing. Now here's where it gets interesting. Instead of selling stock and triggering taxes, billionaires borrow against it. Banks love this. Why? Because lending to someone with billions in stock is almost risk-free. So the billionaire takes out a massive loan. Loans aren't income. They're not taxable. Now they have cash, without selling assets, without triggering capital gains tax. And the interest on that loan? Often deductible. This strategy has a name in wealth circles. Buy, borrow, die. Buy assets, borrow against them, die, and pass them on. Because when heirs inherit assets, something called the step-up in basis resets the taxable gain. The appreciation during the billionaire's lifetime, erased for tax purposes. It's not hidden, it's written into law, and it's perfectly legal. The turning point came after the 2008 financial crisis. While millions lost homes and jobs, asset prices recovered rapidly. Stocks soared, real estate rebounded, private equity exploded. Those who owned assets became dramatically wealthier. Those who relied on wages did not. This created a widening gap, not just in wealth, but in taxation. Investigations later revealed that some of the richest individuals in America paid lower effective tax rates than middle-class families. Not because they broke the law, but because their wealth was structured differently. Income is taxed. Appreciation is deferred. Loans are untaxed. Inheritance resets the clock. The system rewards asset accumulation over labor. And once you reach a certain scale, the rules begin to bend in your favor. Not through corruption, but through complexity. Thousands of pages of incentives, credits, deductions, deferrals, a maze only the wealthy can afford to navigate. So what does this mean? It means two parallel tax systems exist. One for people who earn, one for people who own. For workers, taxes are automatic, withheld before money even touches your bank account. For billionaires, taxes are strategic, timed, optimized, engineered. The long-term effect? Wealth compounds faster at the top because less is extracted annually. And when wealth compounds untouched for decades, the gap becomes exponential. This shapes politics, housing markets, corporate power, philanthropy, even media narratives. Because extreme wealth doesn't just buy assets, it buys influence. And influence shapes policy, including tax policy. Here's the uncomfortable truth. The tax code isn't broken. It reflects priorities. It incentivizes investment, asset growth, and capital formation. It was designed to encourage ownership. The question isn't whether billionaires follow the rules. They do. The real question is, who wrote the rules? And who do those rules ultimately serve? Because in the end, taxes aren't just about revenue, they're about power.